Good afternoon. This is Oliver Slow, Blue Line Futures, coming to you from the Chicago Board of Trade with another episode of the 2-Minute Drill. Today is Wednesday, October 30th. Before we get into a few things that have caught our radar, I do want to remind you, if you have not subscribed to our YouTube channel, head over to youtube.com, search Blue Line Futures, hit that subscribe button, and do not forget to turn on those notifications. My colleagues here in the office put out a lot of great video content each and every day, not just in the agricultural space. We do a lot in the outside markets as well. Precious metals, i.e. gold and silver, those have been a hot commodity here recently. So daily videos on those, as well as energies, stock indices, etc. You name it, we probably have it covered. If we don't do a video on it, call our trade desk. We're pretty active in a lot of these markets each and every day. So again, head over to YouTube, hit that subscribe button. We appreciate your support. Now that we got that out of the way, we can go over some of today's closing prices. In the grain markets, it was relatively mixed. Corn remains more or less a stick in the mud. D's contract down 2 1/4 cents, settling at 4.11 1/2. January soybeans, they were the leader to the upside, 12 1/4 cents higher to settle at 9.91 1/4. And over on the wheat side, December Chicago wheat 2 3/4 cents higher to 5.73 1/4. Moving over to livestock. Cattle lower, lean hogs higher. That was the trend yesterday, and that continued to be true today. December live cattle, $1.52 lower to 186.42. January feeders, $2.05 lower to 241.97. And on the snout side, it was the front month December contract leading the way to the upside, $1.55 higher to 84.37. Coincidentally, we're finishing with lean hogs there, and that's going to take us into what has moved on the top of our radar. We've had basically an uninterrupted rally here in the lean hog market, as you can see by this chart. This is the February contract. I wanted to give us a little something with a little extra time on it relative to the December contract. Now, they say the trend is your friend until the end when it bends, and I largely agree with that. It's not always advantageous to fight a trend like this, but we are starting to see some signs of overexhaustion to the upside. Not just on the chart here with the RSI, but you can also see on the fund positioning as well. You may not be able to see it here, it's pretty scrunched, but fund's basically just a stone's throw away from record net long, as they've been on a buying spree really since the lows in July. Net long about 93,000 futures and options contracts as of last week, which is right up against these highs that we saw this spring, as well as back in 2013. So I don't know that the funds really have a whole lot of new powder to add to this thing. If everyone's bought, who is left to buy? Probably not too many people. So that really leaves the door open for the risk of long liquidation, which could potentially put pressure on prices. Now, on top of that, looking at the volatility for the lean hogs, looking at the CME CVOL index, volatility is, it is really, really low. And you can go back over all history here and see that the volatility is almost non-existent, which makes options really a good potential play here. If you're looking for a counter trend trade, options can be a great way, long puts, buying puts, to get that downside exposure with limited risk. Now, that's not an outright recommendation because our regulatory overlords would never let us do that. But if you do want a direct recommendation for something more suitable for you individually, feel free to call our trade desk. We are ready, willing, and able to help. And on top of that, we're going to wrap things up with just a look at the seasonal tendencies. As you can see here, you get into November, it's a little bit choppy. By the time you get into the back half of November, there's seasonal weakness. Now, I would take this year with an extra grain of salt and take this seasonal chart with an extra grain of salt, because we have had some counter trend trades throughout the last couple of months. So this is not the Bible. Past performance is not necessarily indicative of future results, but there are a few key indicators, again, that lead us to look at the potential fade of this recent rally for at least some reversion to the mean. So that's what we're looking at. Again, that's probably off a lot of people's radar. Lean hogs aren't the most actively traded thing out there. So if you'd like to get involved and potentially play with us, feel free to give our trade desk a call. You can email me directly, oliver@bluelinefutures.com. Remember, trading futures and options involves substantial risk of loss. It is not suitable for all investors.